Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC accountancy revision class. Students, in the previous class, that is first video, isn't it? We have come across the capital and revenue items, then how to bifurcate an item, what are the items that are recorded in that is income and expenditure account, what are the items that will be recorded in the balance sheet. Then which item should be taken in income and expenditure account and which should be transferred to balance sheet. Those have been dealt with. And again we have made a clear distinction between the receipts and payments account and income and expenditure account. In today's class, let me take up some special items that are recorded in the books of accounts of not-for-profit organizations. Okay? Yes. Starting with the first one, donations. We already dealt with these things in regular class. I gave a detailed notes on these things, but still, in brief, let us take up each of the items. Donations. There are two types of donations, friends. One is general donation, and second one is specific donation or special donations. General and special donations or specific donations. Remember friends, general donations of any amount, small or big. Earlier the concept was different. Earlier general donations, if it is big amount, capitalized, if it is small amount, treated as revenue, that concept is no more. It is very clearly mentioned in your NCERT book that general donations are to be treated as revenue, whether it is big or small. Big or small, both the big amount or small amount should be recorded in the income and expenditure account only. Always donations will be, donations will be income for the not-for-profit organizations because people will donate, isn't it? Someone will give donation to the not-for-profit organization. So always we will receive the amount here and it becomes an income for the not-for-profit organization. Clear? So here what we will do is general donations, whether it is big or small, should be treated as revenue item, and should be entered in the income and expenditure account. Remember friends, general donations, revenue in nature, whether it is big or small, should be treated as revenue and should be entered in the income and expenditure account on the which side? Credit side of income and expenditure account. Credit side of income and expenditure account. Very, very simple. No confusions. Now, next one is that is special donations or specific donations. Here you will get only donations or general donations. These are the wordings that will be used in the problem. But here, special donations, always it will be with a specific purpose. Like I will give examples. Donation for construction of swimming pool. Construction of swimming pool. Or donation for construction of lecture hall. Lecture hall, isn't it? or donation for construction of a library. So these are having a specific purpose. These are called special donations. Remember here also, whether the amount is big or small should be treated as capital. Should be treated as capital and should be added to. Is it? No. Should be shown as a separate fund. Should be treated as separate fund on the liability side of the balance sheet. You show it separately on the liability side of the balance sheet. Should not be added to capital fund, friends. That is, you have to write building fund, library fund, isn't it? Construction of library fund, or donation for swimming pool. Like that, you should mention properly on the liability side of the balance sheet. Should be shown as a separate fund because it is having a specific purpose. Remember, these funds should not be utilized for any other purpose other than for the purpose for which it is donated. Confused? Suppose, I'll give you example. Amount is donated for construction of a swimming pool. Either being the secretary or that is a managing trustee of a not-for-profit organization, I should not divert that fund for any other purpose. That amount given as a donation for construction of swimming pool should not be diverted for the construction of a building for library, or should not be utilized for giving that is help or charities purpose. It should be utilized only for the construction of a swimming pool. If swimming pool is not constructed, that amount should remain as a fund on the liability of the balance sheet till the purpose is served, till the swimming pool is constructed. Till then, we are not supposed to use it. But general donation, it can be used for any purpose, for giving charities, for construction of a lecture hall, for construction of a library. These things can be done because it is for general purpose. For any purpose you can utilize. So that is the difference between general donation and specific donation. Clear now point? Now it is very clear, right? General donation, big or small, should be treated as revenue and should be entered on the income side of income and expenditure account. Then special donations with a specific purpose, isn't it? Should be shown as a special fund on the liability side of the balance sheet, and it should not be treated as revenue. It should be straight away transferred to the balance sheet, not to income and expenditure account, whether it is big or small. So this is about donations. Now moving on to the next part, entrance fees. Entrance fees, isn't it? Very simple, friends. Entrance fees means the person pays the amount at the entry, isn't it? At the time of entry into the not-for-profit organization, and every year the renewal fees should be paid. Correct? Membership renewal fees should be paid. So that is, entrance fees is a regular phenomena, though one person pays entrance fees once in a year, and next regular there is a renewal fees will be paid, but still for the not-for-profit organization, many members may quit during a month and many new members may join, isn't it? So it is a regular in nature, recurring in nature, repetitive in nature. So for that purpose, it should be treated as revenue only, as it is an income, should be entered on the credit side of income and expenditure account. Income and expenditure account. Very, very simple. Credit side of income and expenditure account. So that is entrance fees. Clear? But remember, you have to refer the adjustment part in the problem. If in the adjustment part something is mentioned. That is, half of the entrance fees are to be capitalized. 60% of the entrance fees are to be capitalized. What do you mean by 60% capitalized? The remaining 40% you should treat it as a revenue. Very simple, friends. Half of the entrance fees are to be capitalized means half of the entrance fees should be treated as revenue only. Glass is half empty means half filled, right? Implied. So, in that way, you have to treat entrance fees. Is it clear? Yes. Now, let us move on to the legacies. Legacies. What are legacies? They are the donation given under a will. I have explained properly regarding legacy. Remember, friends, they are non-recurring in nature. Non-recurring in nature. Because people donate by creating a will, maybe once in a year or maybe once in 3 years or 5 years, the concern may get such donations, isn't it? It is not actually a donation, it is just like entirely transferring the property to the not-for-profit organization by creating a legal document. That is called will, isn't it? So, legacies are non-recurring in nature or they are non-repetitive in nature, and hence should be added to capital fund. What is the treatment? That is added to capital fund on the liability side of the balance sheet. As it is irregular in nature, non-repetitive in nature, that is non-recurring in nature, such donations are to be added to capital fund on the liability side of the balance sheet. That is the only treatment for legacies. Clear? We are not concerned about the amount. Whether the amount is big or small, should be added to capital fund only. There was earlier, there was some controversy regarding these things. Now there is no controversy. Straight away, legacies means capitalized, added to the capital fund, isn't it? Then next one is sale of investments. Sale of investments. Investments are always asset. Whether it is a long-term investment or short-term investment, it remains as asset, either current asset or fixed asset. It's a long-term investment or short-term investment, right? But it will appear always in the balance sheet. You should not enter this in income and expenditure account. But sale of investment always, sale of investments, you have to calculate. Whenever there is a sale, your duty is to calculate what? Profit or loss. Profit or loss on such sale, isn't it? Loss on such sale. You have to see what was the book value of the investment. That is, at what price the investment was purchased, maybe 10,000. Then they may give you in the problem that is there is a 10% increase in the value of investment. What you should do? 10% should be calculated, should be added, and 11,000 you should show. Correct. 11,000. Now it is 11,000. So there is a profit of rupees 1,000. That is appreciation in the value of investment. So that appreciated part is a gain to the business concern, is a profit to the business concern, or this is not for profit organization here. That should be shown on the income side of income and expenditure account. So you have to show the profit or loss on such sale. Suppose here the investments were sold at rupees 12,000. There is a profit here, am I correct? There is a profit here. Suppose 10,000 is the value of investment. Forget about this part, gain. 10,000 was the original value of the investment, book value of the investment. Now it is sold at rupees 12,000. Don't you think there is a profit or gain on sale of investment? Yes, it is. How much? 2,000 rupees. Correct. Suppose the investments are sold for rupees 9,000. 10,000 was the value of investment, book value of the investment. Now it is sold at rupees 9,000. Don't you see there is a negative? Isn't it? 1,000 rupees is lost, which is a loss to the not-for-profit organization. This part should be debited to income and expenditure account, and this part should be credited to income and expenditure account. That is, loss on sale of investment should be entered on the debit side of income and expenditure account. That is what? As a loss, expenditure side. Here, profit on sale of such investment should be entered on the credit side of, that is income and expenditure account, which is income, which is a profit to the business concern. Clear? Yes, that is about the treatment of investments. Now, let us move on to sale of investments. Sale of fixed assets. Sale of fixed assets. Of course, here also the same thing we have to do, that is sale of fixed assets. Whenever there is a sale of fixed assets, here also the same thing we have to do. We have to see the book value of the asset or purchase price of the asset. So what you have to do is, here you have to see the opening balance sheet, whether there was balance of fixed assets at the beginning of the year. So here what you have to do is opening value of the fixed asset, add purchase during the year, additions. You will get this on the payment side of receipts and payments account. This you will get in the opening balance sheet or information given in the problem. Then you have to take the total here, total less anything sold, correct, anything sold. Then you have to deduct depreciation on fixed asset. Whatever remains is the final value of the fixed asset should be shown in the balance sheet. The final value should be shown in the balance sheet. That is what you have to do here. And remember, whenever there is a sale of fixed asset, actually, as per the very definition of not-for-profit organization, they are not supposed to sell anything. They are not engaged in buying and selling activities. But still, sometimes some item is not proper, then they may sell it, isn't it, at a lower price. So during that time also, whenever we sell, we have to calculate profit or loss on such sale. Profit or loss on such sale, and it should be debited or credited. If there is a profit, should be credited to income and expenditure account, and if there is a loss, should be debited, that is, should be entered on the expenditure side, debit side of income and expenditure account. That is what you have to do here. And book, that is final value, closing balance should be shown in the balance sheet, on the asset side of the balance sheet. That is what you have to do here. And remember, while calculating the depreciation, you should be very careful. If percentage is given, if amount is given, no headache for you. If percentage of depreciation is given, then what you should do is, you have to make sure that you will calculate depreciation on the opening balance for the entire year, for full year, and then on the sold asset, from the beginning of the year till the date of sale, you should deduct depreciation. And remember, even on the additional purchases, you have purchased maybe in between the year accounting year started on 1st April and you have purchased on 1st October, additional, that is asset. Then you should calculate depreciation on additional asset from the date of purchase till the date of sale. Date of purchase till the end of accounting year, till the end of accounting year. Suppose you have purchased on 1st October, then you should calculate depreciation up to 31st March of the next year, that is year end of the year, may only for 6 months and not for full year. As long as the asset is there with you, you can charge depreciation. If the asset is not there with you at all, no question of charging depreciation on that. So when you purchase asset in between the year on 1st October, on that particular asset which is purchased on 1st October, you have to charge depreciation only for 6 months, that is till the end of the year, and on the opening balance of asset, you should calculate depreciation for the entire year. Same is true in case of the asset which is sold. On the asset sold from the beginning of the year till the date of sale, you have to calculate, because after the asset is sold, it will not be available for us to use in the that is a not-for-profit organization, correct? So that is what you have to do here regarding, that is fixed assets, sale of fixed assets. Then next one is subscriptions from members. Very important, because without subscription you will not get any problem in not-for-profit organization, because that is the major item of adjustment in income and expenditure account of a not-for-profit organization. So make sure subscription is a revenue item, it is not a capital item. It is not a capital item. So first I will take up the adjustments, how the subscription will appear, those things I will explain. Okay. So remember, subscriptions are the revenue items, and it is revenue receipt, income, or revenue receipt or income. Remember, where it will find a place, it will find a place on the income side of the income and expenditure, or debit side of income and expenditure account. Income and expenditure account, right? Yes. Now, what you have to do is, you have to see anything is there in the opening balance sheet. If anything is there in the opening balance sheet, like outstanding subscription at the beginning of the year, if it is at the beginning of the year, whatever subscription is received during the current year, on the receipt side, you will find on the receipt side 2 subscriptions. In that, the last year subscription is also received. I'll give example. Opening balance sheet. Here, that is it is given as a subscription outstanding on the asset side. Outstanding subscriptions, maybe 1,000, isn't it? Or in other problem, it may be like a subscription received in advance. Received in advance. Correct? Then, on the debit side of receipts and payments account. Receipts and payments account is given here. On the debit side, it is given as 2 subscriptions, maybe 20,000. 20,000. And in the adjustment part again, it is given, suppose, outstanding subscription at the end of the year. By the end of the year, outstanding subscription for current year, maybe 3,000, suppose, isn't it? Then one more instruction is there. Subscription received in advance. I'm sorry, subscription received in advance. Received in advance. That is for the next year, isn't it? Advance for the next year subscription received during current year. Meaning is that, right? So these are the things given in the problem. Suppose what we'll do, we will prepare income and expenditure account. Income and expenditure account. This is expenditure side and this is income side. Correct? Now we'll take that item on the receipts and payments account. Debit side it is there, income, receipt. So we'll find a place on the credit side of income and expenditure account, that is income by subscription. So we will enter in inner column, that is 20,000. Then what we will do, this 20,000 is received during current year. Clear? Here in the opening balance sheet, there is a mention of, that is subscription received in advance. That means what? Current year subscription received during last year. Last year, that is a opening balance sheet of current year means closing balance sheet of last year. Am I correct? So in the closing balance sheet of last year, it is mentioned that subscription received in advance means what? Current year subscription received during last year in advance. Do you agree? Whether it belongs to current year? No. But this amount is inclusive of this. Isn't it? Subscription received in advance, whether this is inclusive of this is my question. No, but this subscription belongs to which year? Last year we have received subscription in advance related to current year, correct? So this subscription belongs to current year, which is not included in this amount, because that amount was received during last year itself. Current year amount was received during last year, so this is the subscription which is exclusive of this amount, but this amount belongs to current year. So what we will do is we will add this amount, that is how much? Suppose take it as 1,000. We will add this amount 1,000. That is, we will write here current year subscription received during last year in advance. But it belongs to current year and not last year. Clear? Yes. So that is what we will do here. We will add this. Then moving on to the asset side here. At the beginning of the year, outstanding subscription, income receivable, income of last year which was pending to be received. That means what? This is inclusive of this amount. Last year we were supposed to receive 1,000 rupees which was not received, but while receiving during current year we have received that amount. That means this amount is inclusive of this amount which is not belonging to current year. It belongs to last year. It was the outstanding income of last year but received during current year. We have to assume that this amount is inclusive of the amount which was pending during last year. As it is not belonging to current year, deduct. that is minus 1000. That is what we will write here. Last year outstanding subscription received during current year. Last year outstanding subscription received during current year should be deducted as it is not belonging to current year. Clear? Then moving on to adjustment. Outstanding subscription for a current year rupees 3000. This year subscription pending to be received. It is earned but not received in the form of cash. That is called outstanding subscription for current year. Current year amount is pending to be received. So, when it is belonging to current year, add. You have to write outstanding subscription of current year not received or subscription receivable during current year. So, add how much? How much? 3000, right? Yes. Then, subscription received in advance, rupees 2000 at the end of current year. By the end of current year, subscription received in advance means what? Next year subscription received during current year, which is not belonging to current year. Next year subscription we have received during current year. So what do we have to do? We have to deduct this because it is not belonging to current year. We are not supposed to receive this subscription during current year, but we have received in advance which belongs to next year, not current year. Our concern is only about the current year, not next year or previous year. Correct? So we will deduct that amount, that is a subscription of next year received during current year or subscription received in advance, right? 2000 we will deduct, and after doing plus minus, whatever amount remains, that should be entered in the outer column. That is what we have to do with the subscriptions. So the major item, every time we will find this item in each and every problem. So make sure of this thing, and I'll take up the other part in the next class. Assignment, as I already told you in my previous video, I will upload the questions on that day itself, on the day of the video. Clear? Yes. So thank you for watching this video.
Don't forget to like our video and subscribe our YouTube channel for all the updates.